Hi everybody, this is May 5th, 2016. This is Kimberly Swartz and I'm here with John Bukowski of Captain John Charts. We are pleased to share a relative strength switching strategy to consider for your portfolio or for maybe getting a great sense of what is going on in the market. First, I'd like to briefly mention what relative strength is because we could have some relative newbies with us. It is basically comparing one investment class to another, one stock to another, or any investment to another. If you take one investment's price action and compare it to the other, and the chart is going up left to right, it is outperforming the other investment. Now, there's a few great online sources that you can compare one against the other. One of them is stockcharts.com or tradingview.com. On TradingView, you type the investment symbol, / no space, and then the second investment class you want to compare. On Stock Charts, you type in the investment, no space, a colon, and then the second investment. Now, let's go on to our low volatility versus high beta Momo primer. I'm going to turn this over to John.
So, thanks, Kim. So what happens if your Momo stocks are going down faster all of a sudden than anything else? Well, what happens when your low volatility stocks are going up faster than anything else? That's the question, Kim.
Well, does your low volatility become momentum and your momentum become laggards? Well, if you know the answer to the above problem, you are sleeping at night. But what if you are not? What if you're not sleeping at night? Something's keeping you up. Well, as we can see on the right with the beautifully illustrated roller coaster picture, this is from a Nobel Prize winner for economics. And he said, the more emotional the event is, the less sensible people are. We know that's true.
And that's true, Kim. So what you need is a strategy and a plan. And one of the things we want to show here is that there are times, of course, when momentum is at your tail and you can make a lot of money following the trend of high momentum stocks, high relative strength stocks. But you get to a point at some time that strategy goes on hold for a bit, and sometimes we need to make a decision, and the way we do that is by comparing a strategy that uses high momentum, high relative strength stocks and compare it to low volatility stocks. And sometimes the money wants to move to play defense if hedge fund managers, if mutual fund managers and investors think that it's time to be conservative. They will, especially if they have to be fully invested at all times, they're going to switch from high relative strength to low volatility.
All right, so we do know that fear and doubt lead to bad decisions. What we're talking about is understanding when the transition occurs. That's what allows you to act confidently, and that's what puts your mind at ease. All right, do you want to see how? Here is a piece of the solution.
So one of the things we can do is we can watch the price action of the Powershares PDP, which is the high momentum portfolio, and compare it to the SPLV, low volatility, which happens to be the lowest volatility of 100 stocks in the S&P 500. Now, when people get cautious, scared, defensive, they tend to want to migrate out of high relative strength leaders and into defensive names. That's their way of trying to protect without going to cash. Understanding when this rotation takes place is great because you know that's when it's time to take a switch from either high volatility to low volatility and so forth. and and the way we do this is by charting one of these products against the other product. And that's what's known as relative strength.
Again, knowing this is what brings the confidence and the peace of mind that you're looking for. You need to pay attention to relative strength. Now, it's said that a loss of momentum is often a loss of perspective. Keeping momentum is a matter of gaining perspective. So that's why we're looking at momentum, because we want to keep our momentum in our portfolio, and therefore we need to keep our perspective. Now, the Powershares DWA Momentum Portfolio Fund, known as symbol PDP, is based on the Dorsey Wright Tech Leaders Index, and this is a great way to gain perspective. John, why don't you go over this chart here?
Well, as you can see, it's had a phenomenal run, and it's slowly rolling over. Maybe could possibly looks like it might be making a rounded top. But what you'll see is that while actually momentum was making a higher high. When I say momentum, I mean momentum of PDP, the Momentum Portfolio ETF. The actual measurement, the RSI, did not confirm the higher high. So that was a call to us that maybe perhaps money was starting to move out of this area and try to get more defensive.
Right. The other thing you should know about the PDP, the fund invests 90% of its total assets in common stocks that comprise the index. And so, like we have on the screen, the index includes approximately 100 U.S. companies from the NASDAQ benchmark index. And this is constructed pursuant to Dorsey, Wright and Associates, etc. You can read on the screen later. We have more important information to get onto here with the SPLV versus the PDP chart. The signal was showing that switch at the beginning of 2016 and remains in place.
So we all know what happened going into 2016. A lot of people were surprised about the sell-off that we had. We weren't, because back in the summer of 2015, we noticed the advanced decline line was falling apart, and we just, and fewer things were working. The new high list was contracting, the new low list was expanding, and we knew that things were different than they were over the past couple years. So, not to say that there weren't ideas to happen on the long side, but it became fewer and fewer. Now, if you look at what happened with the switch on the chart, when you look at the high momentum PDP versus the low volatility SPLV, you'll see we had a breakout. And if you switched with some of your money from one asset to the other asset, one product to the other product, Kim, you can point that out, please. You know that you got through that terrible correction in January, where, well, gosh, I think at some point over 50% of the stocks in the S&P were down over 20%. For the smaller stocks, it was much worse. So what we see right now is we still see leadership in low volatility versus high beta, and so we are on defense.
Well, if you think about what the SPLV is, besides it being a low volatility index, it has the lowest realized volatility over the past 12 months, and it's 100 stocks from the S&P 500. And when you see that breakout, the thrust forward and up is quite impressive indeed. All right, so signals. Technical analysis involves looking for signals and, of course, patterns, but we're talking about signals. We're looking for signals in advance of other market action. What are you looking for? It's easy to get overwhelmed. There's so many different types of indicators and signals. But when you're adept at reading the right signals at the right time, you are more likely to outperform. Signals can be found in indicators. Now, a key indicator to help foresee changes in price is momentum. You should always keep that in your toolbox, because 24/7 we ruminate, debate, and contemplate about who has got the Momo, who's losing it. And what I like to see is this PDP Powershares DWA momentum portfolio. Like we just talked about, it's the basket of high relative strength stocks, and it's run by Powershares. Now, this ETF has got Momo, all right? So if they don't, or it shows divergent patterns, you better know, and I'm not joking, you better know. Is money moving out of momentum? You got to pay attention when money is moving out of momentum. When it is, relative strength leaders are dying or they're dead. Quite frankly, money's going to follow the Momo, and it exits to conservative choices. So there's a lot of information on this screen, but the one thing I want you to focus on quickly is the picture of Buddha floating in contemplation before what appears an eye. And the quote. The quote reminds me of this picture and of the principles that you would typically read about with Buddha. But think about this. A loss of momentum is often a loss of perspective. Keeping momentum is a matter of gaining perspective. So what we're trying to do is gain perspective and keep our momentum. And the way we're going to do that is we are going to follow the momentum and the money that's following the momentum. This makes me think I need to know what is inside the money flow. Right, John? Isn't that a very important thing to understand?
Absolutely. So keeping an understanding of the relationship between where the money's going, between momentum when things are good, okay, and there's a lot of things you can look at. You can, when the small caps are outperforming the large caps, that's typically good. When discretionary is outperforming staples, that's typically good. When NASDAQ is outperforming the New York Stock Exchange, that's typically good. Good, when I say good, I mean that is showing that risk is on, and that's where you want to be. When you start seeing rotations out of these high-flying sectors, NASDAQ, small caps, mid caps, and other such indicators, then that means that there is a reason why investors have made a decision to rotate into defensive sectors such as staples, telecoms, out of NASDAQ, out of small caps.
Utilities.
Yes.
And treasuries.
And treasuries.
Well, think about, okay, what we need to understand when we are new is that there is a huge canvas, as I call it, of accomplished portfolio managers, and they reposition their portfolios, and a percentage of them need to, as we show, always be invested. They cannot go to cash. They don't have discretion. They're going to rotate to defensive names. So we just talked about what some of those defensive places would be, like staples, utilities, treasuries, etc. But I would like to focus on the statement below that clarity is momentum that has no resistance in it. So where relative strength is found is generally the place with the least resistance. So again, back to the floating Buddha and the quote. If we are keeping momentum by gaining perspective, and momentum that has no resistance is clarity, I'm going to get clarity and perspective by comparing inside places where money flows to. And to do that, you should always compare the relative strengths of investments to uncover these underlying moods and trend reversals. How the sectors perform relative to each other can reveal more. With that comes the clarity and perspective we need to keep our momentum, our personal momentum, while following the market's momentum. Okay, we're going to cut for a short break and we'll be back with part 2.